Right. Good morning, everyone. Morning.
Good morning, sir.
Good morning, sir.
Right. So today we are having an online session, right? So those who have specially go to the SAP, please join online, right? All right. So today we are going to discuss about the different types of corporate governance codes which has been issued by different countries, right? So that is today's discussion. So before that, last 6 weeks, actually we have finished off 6 weeks. So last 6 weeks we have discussed about the corporate governance. From this week onwards, uh, actually in this week we are finishing off the corporate governance discussion. Then we are moving on to the ethics, right? Right. So I'm going to start the today's session. Um, Let me share the screen. Right. Can you all see my screen? Yeah, can see, right?
Yes, yes, sir.
Right. So today, as I mentioned before, we are going to discuss about the international corporate governance codes, right? So we have up to now we have discussed the corporate governance principles. We have discussed about the agency theory. We have discussed about the Firstly, we have discussed about the introductory part for the corporate governance. Then we have discussed about the agency theory. Then we have discussed about the board membership, board committees, right? So that sort of things we have discussed regarding the corporate governance. So today we are going to discuss what are the codes which influence those kind of corporate governance guidelines, right? So in different countries, they are having a different corporate governance codes. For example, if you remember, we have discussed about the approaches of the corporate governance in last week, right? In there, we have discussed about the rule-based approach and the uh, what do you call the principle-based approach, right? So when it comes to rule-based approach, it is based on the basically based on the US, right? And when it comes to principle-based approach, it's based on the UK. So likewise, with the country's perspective, the corporate governance codes may be changed, right? So today we are going to discuss about the different code of the corporate governance codes, which has been issued by the different countries, right? Okay. So moving with that, so actually some of you asked about the answers for the MCQ questions. So that I will upload today, which we have discussed in the last few weeks, because in next week you are having the quiz, right? So as a help for your given answers, I will upload my answers as well. Then you can compare and see whether the answers are correct, right? All right. So when it's come to the corporate governance codes, uh, major governance guidance includes UK corporate governance codes, and the international guidelines or guidance includes the OECD principles and the ICGN report, right? So those are the main corporate governance codes. So nowadays the corporates are following, right? The first one is a UK corporate governance code and the international guidance, right? Internationally accepted guidance is there, which we call it as OECD principle and ICGN report. So I will come to this OECD and the ICGN, right? Don't worry about the words, right? So those are the major governance guidance we are having now, right? We are having now. So under the major governance codes, firstly, I'm moving on to the UK corporate governance codes. So when it comes to the UK corporate governance code, we need to look at the Cadbury report, right? Which has been issued by 1992, right? So in this report, basically they have discussed about the two concept called fat cat and milking, right? Right. So it says much criticism exercise exists About the corporate governance matters, that this time press coverage of fat cat directors milking companies as well as lack of information being presented to shareholders was being scrutinized heavily by the media. Right. So each of these corporate governance codes has been issued because of an issue, right? Because of an issue. So in this report has been issued because of in the 1992, right? There's a criticism is going towards the UK corporates, right? That information presented in the annual report is not enough to take the decision of the shareholders, right? Right. Lack of information being presented to shareholders. So then, as we discussed, it's if we don't have much information, we can't take some decisions, right? As we discuss in the your general life also, if you don't have any much information about something, so you can't take a proper decision, you can't take a correct decision, right? Right. So likewise in that time, right, there are some issues regarding the companies are not giving the proper information to the shareholders, right? Proper information to the shareholders. So that's why the committee formed, like in Sri Lanka, if something happened, the committee will be formed, right? Right. මොකක් හරි වුණා උන ගමන් කමිටි එකක් ෆෝම් කරනවා. ෆෝම් කරලා කමිටුවක්පත් කරනවා. ඒතකොට ප්‍රශ්න ඉවරයි. right? මිනිස්සු හිතනවා හරි කමිටුවක්පත් කළාට පස්සේ වැඩේ හරි කියලා. Right? For that medicine issue also the same thing, right? So they have appointed a committee, right? Then people actually forget that the medical issue, that the medicine, there's a medicine issue nowadays going on with the famous minister, right? That one also, that existing government has been appointed a committee to check whether it's actually happened or not. So the committee report is what minister නෙවෙයිනේ මේ බෙහෙත් approve කරන්නේ, right? Minister නෙවෙයිනේ බෙහෙත් ගෙන්නන්නේ, right? It's only providing the approval to the medicine, but he's not testing the medicine, right? So that's the point they have raised, right? Right. So likewise in that time also, because of this issue, so UK stock exchange, that means London Stock Exchange, appoint a committee, right? A committee was formed and chaired by Sir Adrian Cadbury, right? So that's why this report named as Cadbury report, right? The name of the chairman, right? In 1991, from recommendation of the London Stock Exchange and the Financial Reporting Council, right? Right. Like in Sri Lanka also, we are having a financial reporting council, right? Likewise in the UK, because of this issue, the people are raising so much of doubt about the financial information which is presented to take decisions. So therefore, they have recommended a committee, right? That committee is chaired by Sir Adrian Cadbury. So that committee is formed in 1991, and it has been recommended by the London Stock Exchange and the Financial Reporting Council, right? Right. So when you're looking at the recommendation of the Cadbury report in a brief manner, right? It says the operation of the main board, the establishment of composition, operations of key board committees, the importance of the contribution that can be made by the non-executive directors, the reporting and the control mechanism of the business, right? So you can see the things we have discussed, right? They have highlighted. They have discussed about the main board, right? When it's come to the Sri Lanka, we are having a main board, the Divisary board. Likewise, different boards are there. Board means if you want to list it in the Colombo Stock Exchange, there are different boards are there. Like දැන් අපි හිතමුකෝ කම්පැනි එක අපි ලිස්ට් කරන්න යනවා කියලා කොලම්බෝ ස්ටොක් එක්ස්චේන්ජ් එකේ. එතකොට ඒ කම්පැනි එකේ තියෙන වැලියු එක අනුව, කම්පැනි එකේ තියෙන ඇසෙට්ස් ප්‍රමාණය අනුව, කම්පැනි එකේ තියෙන බිස්නස් ප්‍රමාණය අනුව මේ එක එක බෝඩ්ස් වල අපිට රෙජිස්ටර් වෙන්න පුළුවන්. බෝඩ්ස් කියන්නේ එක එක කැටගරිස් කියන එක. right? Colombo Stock Exchange එකේ categories තියෙනවා. The primary categories we call it as main board. හොඳම category එක අපි කියනවා main board එක කියලා. right? So the main board එක register වෙච්ච companies now උදාහරණයකට John Keells, Haley's, Dialogue, right? Likewise, the main board companies are there, right? Sometimes we consider it as big companies, main board. And also we are having a divisory board, right? Some emerging companies will registered in the or the listed in the Colombo Stock Exchange under that divisory board. So there are some threshold as well. If you're having this much of revenue only, we can recognize, you can register under divisory board. This much of revenue only, you can register under the main board, right? So likewise, in the Cadbury report, they have mentioned about the operation of the main board, the establishment and the composition of the main board, and also operation of the keyboard committees. So we have discussed about the committees, right? And also the non-executive directors contribution. So we need to have a kind of a good non-executive directors contribution towards the company, right? To have the independence, right? And also more importantly, our next discussion, the control mechanism of the business. In 8 weeks, 9 week onwards, we have discussed about the business risk. That means a control mechanism, right? So these recommendations focus on three principles: openness, integrity, and the accountability of the directors to the shareholders, right? So these three recommendations, four recommendation has been based on three principles, right? The corporate governance principles. So they are looking at openness. You need to open, right? You need to give all the information to the shareholders which is required by the shareholders. And you need to be integrity. You need to maintain the integrity. That means you need to be honest, right? Right. You need to, when you are doing a business activity as a shareholders, as a director, sorry, as a director, you need to maintain your integrity, right? And also accountability, right? Accountability. So what do you mean by the accountability is, as a director, you need to be responsible to the assets you are managing of the shareholders. You need to tell what happened to the assets, what happened to the money to the shareholders. That we call as accountability. So based on this recommendation, you need to maintain these three principles. So that's the Cadbury report recommendation. The Cadbury report recommended code of best practice with which the board of all listed companies registered in UK should comply and utilize a comply and explain mechanism. Right. Right. So they have suggested, they have not uh, legalized the corporate governance principle, because we have learned in the UK they are following the principle based approach, right? If you can remember, they are following the principle based approach. So they are suggesting from this report also, they are saying that we are assuming this code, it's a best practice, right? This is the best practice you can do, right? මේක තමයි හොඳම විදිය ඔයා කම්පැනියක් පාලනය කරන්න ඕන, right? Best practice, because we are following the principle based approach. That means you can go as a listed companies, you can follow these best practices. UK listed companies, you can follow this. It is recommended to follow these best practices. And also you can utilize the concept called the comply and explain. Can you remember what do you mean by the comply and or explain? Comply or explain? Yeah. Anyone can brief? What do you mean by the comply or explain? Under the principle based approach we have discussed. Guys, you need to talk, because not like physical class. If you want, you can sleep, right? I know 50% of you now, you are in the bed, right? On the bed, and you are peacefully looking at this video, right? Right. So therefore, you need to engage with the session. So otherwise, no point of having online session, right? Yes. What do you mean by the comply or explain? Guys, please talk. So under the principle-based approach, we have discussed about the concept called comply or explain last week, as I remember, right? If I'm not mistaken, right? Last week we have discussed about the comply or explain. So what do you mean by that concept? Can you hear me? Guys, can you hear me?
Yes, sir.
Yeah. So what do you mean by the comply or explain?
Comply means following rules or standards by
Okay.
adhering to the core principles.
Okay, then explain. Can't remember.
Can't remember, sir.
All right. So under the principle-based approach, what do you mean by the principle-based approach? It's like a principle, right? We have discussed. In the rule-based approach, we have discussed, like, for example, when it comes to SAP campus, right? So it's a kind of a rule that you need to maintain 80% of attendance, right? But if you are following the rule-based approach in the SAP campus, what will happen? 180 නැත්තම් ඔයාලා මොන reason එක දුන්නත් ඔයාලට exam එක ලියන්න දෙන්නේ නැහැ. That's the rule-based approach. But I think the SAP campus is following the principle-based approach. Even though the rule is there, right? Let's say you are only having 70% of attendance, right? Right. Right. Even though you are having a 70% of attendance, you can still, you can still, what you can do? Sit for the exam after, let's say, filing a kind of a medical or something else, right? So you can, if you can reasoning why you are not attending to the balance 10%, so sometimes there will be a chance, right? There will be a chance, right? In the rule-based approach, strict rules, if you are not comply with the rules, definitely you have to penalize, right? But when it comes to principle-based approach, what you can do is you can follow the strategy called comply or explain. That means the best practice has been presented. Best practice is you need to attend with the lectures, right? That is the best practice, right? So what you can do, either you can comply, either you can attend with the lectures or explain. If you are not attending the lectures, you have to explain why, right? Right. If you are not attending the lectures, you need to definitely explain why. So then it will be an acceptable reason. Then they are going with that, right? That's we call it as comply or explain. According to when you're applying this to the corporate governance codes, right? Since the corporate governance codes is not legalized, we have discussed why it is. What is the reason for that? Right? Since it is not legalized, what you can do is they have presented the best practice. If you want, you can follow the best practice. If you are not following the best practice, you have to explain why you have not following the best practices, right? For example, in the report, it says you need to have the good non-executive directors. That means you need to look at the contribution made by the non-executive directors, right? Right. So we have learned if you can, you can appoint good non-executive directors to your company, talented non-executive directors to your company. That's the main concern. That's a best practice, right? But sometimes, because some companies are very small, they can bear the cost, right? So they can't appoint the exist number of non-executive directors, right? So they can now explain why they can't appoint the non-executive directors because they don't have much money, right? So likewise, in the corporate governance practice under the UK principle-based approach, right? The best practice has been presented, right? The best practice has been presented. What you can do is you can comply. That means you can follow the best practice, or you can explain if you are not following it. Right? What happened? What is the reason why we are not following the best practice? Right. So that we call it as principle-based approach. In this Cadbury report also, they have presented a best practice, and they are saying that it is good to follow these approaches for all listed companies. And also, if you can go with this, you can follow the comply or explain mechanism, right? Comply or explain mechanism, right? Right. So that's about the Cadbury report. So in your examination, if I'm asking about the international corporate governance course under the UK, right, the first one you have to write is a Cadbury report, and what are the recommendations they have mainly get the operation of the main board, establishment and the composition. operation of the key board committees, like we have discussed about the audit committee, remuneration committee, likewise, right? And also the contribution made by the non-executive directors and what kind of a reporting and control mechanism the companies or the businesses should be have, right? And based on this recommendation, the recommendations are linked to three main principles: openness, integrity, and the accountability, right? Right. So those are the things you have to highlight when this has been asked in your examination. So in this area, that means in this International Court of Corporate Governance Codes, purely the theory will be tested because I can't go beyond that. Right? Theory is there. I will test the theory. Right? But when it comes to other areas, I have discussed with you. When it comes to case study, there are different approaches I can follow. But here, what I can ask is, I'm asking what are the corporate governance codes under the UK approach, right? Name them, and you need to elaborate what are the recommendations, right? Right. So then, under the major corporate governance codes under the UK corporate governance, which we have discussed, there are two main corporate governance guidance we are having in the world. One is UK corporate governance code. The second one is international guidance, include the OECD principles. So under the UK corporate governance code, we have discussed about Cadbury report, right? Firstly, then we are moving on to the next one, the Greenberry report, right? Right. දැන් මගෙන් අහන්න බෑ ඒකේ කැඩ්බරි report කියන්නේ ඒකේ කමිටි එකේ chair කරපු එක්කනාගේ එයාට ගෞරවයක් විදිහට තමයි ඒකේ නම දාලා තියෙන්නේ. Right. So in 1995, the Greenberry Committee published a code which established principles for the determinations of directors' pay and dealing disclosures to be given in the annual report and accounts. So the main purpose for the Cadbury report is because there is an issue coming up in the society that information is not clearly transferred or accurately transferred to the shareholders. That's the issue why we are having the Cadbury report. But when it comes to the Greenberry report, the Greenberry committee has been established for what? To determine the director's fee. To determine the director's basically the remuneration and detailing disclosures to given in the annual report and the accounts. Right. So as we know, management of the company is done by the directors. Right. We have discussed on the listing when it comes to listed companies. Even though you are a shareholder, even though you are having ownership about your company, right? You can't involve with the management. Right. If you want to involve with the management, you have to go there in the director board. So therefore, directors are the managers or management of the company. So then they can decide their remuneration. That's why we are having the remuneration committee likewise. So therefore, there's a concern is coming up in 1995 about the directors' payment. The shareholders are claiming that directors are getting high salaries. Right. So therefore, the Greenberry committee has been published to look at this directors' payment, and they have to provide some detailed disclosures in the annual report how this director's payment has been established. Right. Right. Because it's a kind of a concern. Right. අපිට උනත් concern එකක් වෙන පුළුවන් company එකේ අයිතිකාරෝ ඉද්දි management එක කරන කට්ටියට ඕන තරම් ඒගොල්ලෝගේ payment එක decide කරගන්න පුළුවන්. Right. Payment එක decide කරගන්න පුළුවන්. Right. 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 මම නිකන් උදාහරණයක් කියන්නම්. Right. දැන් අපි හිතමු ඔයා company එකක් පටන් ගත්තා. Right. අපි හිතමු ඔයා මල්ටි ගුණ business එකක් පටන් ගත්තා කියලා. Right. පන්සලක් ගාව මල්ලි ගුණ. Right. පන්සලක් ගාව මල්ලි ගුණ. ඔන්න ටික දවසක් ඔයා මල්ලි ගුණ උපින ඉති. Right. දැන් ඔයා business එක හොඳට යනවා. Right. හොඳට මල්ලි ගෙනිනවා. Right. So ඔයා අවබෝධ කරගන්නවා මම මේ පන්සල ගාව ඉඳලා විතරක් මදි. මම යන්න ඕන තව වෙන තැන් වලට. Right. තව පන්සල් වලට යන්න ඕන. තමන් දාලා මල්ලි ගාව වලට යන්න ඕන. ඊපස්සේ දැන් ඔයාලට එක තැනක එකපාරනේ දැන් මෙතන හොඳ business එක හැදලා තියෙනවා. So ඔයා මොකද කරන්නේ? ඔයා තව සේවකයෙක් ගන්නවා. එයාව දාන මෙතෙන්ට ඔයා යනවා. දල්දා මල්ලි ගාව වලට මල් පුරවන්න. Right. So ඔයාට ටික දවසකදී ඔයාගේ business එක හොඳට යනවා. ඔයා ටික දවසක තේරෙනවා මේ business එක කරනකොට තව පුළුවන් අපිට flower decors ඒ වගේ business එකකට යන්න. right right. so ඒකට මට තැනක් ඕන වෙනවා. ඒ වගේම මට වාහන ඕන වෙනවා delivery කරන්න. right. එතකොට දැන් මේකට ඔයා දන්නවා මේ business එක හොඳට යනවා කියලා. වට funds නැහැ. You don't have funds. right. so what we can do? We need to look at the strategies to look for a funds. දැන් ඒතකොට ඔයාගේ යාළුවෙක් ඉන්න හොඳට සල්ලි තියෙනවා යාළුවට. right. ඔයා යාළුවට කියනවා මෙහෙමයි මචං මගේ business එක හොඳට යනවා. right. මගේ මෙහෙම idea එකක් තියෙනවා business එක develop කරන්න. right. ඒ නිසා මට මේකට invest කරන්න. right. ඊට පස්සේ agreement එකට එනවා. හරි okay. මං invest යාළුවා කියනවා හරි මං okay මං invest කරන්න. right. company එකේ අයිතිය මට දෙන්න. right. company එකේ අයිතිය මට දෙන්න. මං ඔයා company එක manage කරන්න. ඒකට මං මට salary එකක් ගෙවන්න. right. යාළුවා කියනවා හරි okay I will take the ownership of the company. I will invest. I will take the ownership of your company. And I don't know what you are doing, right? I don't know anything about the flower business, right? So you can manage your business, right? But I will take the ownership, right? I will take the profits, right? I will pay a monthly salary, right? Monthly salary. So now what will happen? The friend is taking the ownership, right? So now you're working as a manager for the friend, right? ටික දවසක් යද්දී right ඔයාලට තේරෙනවා කම්පැනි එක දියුණු කරන එක වැඩක් නෑ මට. මොකද මට already payment එකක් හම්බ වෙනවා month. I'm getting a fixed monthly payment, right? So therefore I think I don't care about the profits, right? I don't care about the profits. I need to look at my own payment. Right? That's the normal human behavior, you know. So everyone is looking at their own needs, right? Right. So that's why Galle Ramukbal is collecting money and given to his what do you call the friends and family, right? Because he's looking at his own needs. Everyone is like that, right? But I'm not accepting that that has been done. But everyone is looking for your own needs. Why you are learning? Why you are looking at this screen? Because you have to learn. And likewise, in that scenario, that person is thinking, I'm getting a salary. Why I'm caring about the profit, right? In the initial stage, he's having a kind of intention to generate profit, right? He's having an intention to generate profit. He's looking at the development of the company. But now, after he's become a manager of the company, he's not going to earn profit, right? He's only looking at his payment, right? So ටික දවසක් යද්දී ඕනට තේරෙනවා දැන් මේ මැනේජ්මන්ට් එක කරන යාගේ යාළුවා වැඩි බිස්නස් එක ගැන හිතන්නේ නැහැ. බිස්නස් එකේ ඩෙවලොප්මන්ට් එක ගැන හිතන්නේ නැහැ. එයා සාමාන්‍ය විදිහට බිස්නස් එක කරගෙන යනවා. සමහරට අර කලින් කරාටත් වඩා අඩුයි. ටික දවසක් යද්දී ප්‍රොෆිට් ෂෙයාරින් කරද්දී right යාළුවට එන ප්‍රොෆිට් එක යාගේ ඉන්වෙස්ට් කරපු amount එකට අදාළ එන රිටර්න් එක අඩුයි. right right. So such kind of a situation, right? There's a concern regarding the director's payment and the corporate governance principles, right? Right. The same kind of scenario happened in the UK, right? Shareholders are having some concerns regarding the director's pay. They think directors are taking more money from the company, right? So that's why they are claiming about that, right? So that's why the Greenberg Committee has been published. Greenberg Committee has been established and they have published a code which provide the determinations for the director's payments. And also as a company, you need to have a detailed disclosure, right? Detailed disclosure in the annual report regarding the director's payment, right? Regarding the director's payment, right? Central to the Greenberg report recommendation was strengthening accountability and enhancing the performance of the director. These two aims were to be achieved by the presence of the remuneration committee comprised of independent non-executive directors, right? the presence of remuneration committee. දැන් ඔයගොල්ලෝ මේ course මේ present කරපු reports නිසා තමයි මේ best practices of corporate governance course ඇවිල්ලා තියෙන්නේ. අපිට remuneration committee එකක් තියෙන්න ඕනේ, audit committee එකක් තියෙන්න ඕනේ කියන එකට base එක වෙලා තියෙන්නේ මෙන්න මේ reports. මෙන්න මේ issues ආපු නිසා තමයි මේ committees ඇවිල්ලා තියෙන්නේ. right? දැන් මොකද ප්‍රශ්නයක් නැත්නම් අපිට committees ඕනේ නැහැ. ප්‍රශ්න නැත්නම් ඒකට solutions ඕනේ නැහැ. අපිට board එකක් විතරක් තිබ්බනම් ඇති. ප්‍රශ්නයක් නැත්නම් මේ ප්‍රශ්නයක් තියෙන හින්දා තමයි මේ reports base කරගෙන තමයි මේ best practices ඇවිල්ලා තියෙන්නේ. right? So that's why these reports are very important. Right? Because of this issue, the Greenberg report has been suggested remuneration committee. You need to have a remuneration committee, and that committee should be comprised of independent non-executive directors. Because obviously this director's payment is a kind of issue, right? Let's say you don't have a remuneration committee, so directors can decide their own salaries, right? So that is why they have suggested a strategy called remuneration committee. And that remuneration committee also, even the committee is appointed, that committee should be consist of independent non-executive directors, right? Right? Independent non-executive directors who would report fully to the shareholders each year about the company's executive remuneration policy, right? So they are not reporting to the board; they are directly reporting to shareholders. That's their recommendation. But when it comes to Sri Lankan context, the remuneration committee will suggest some things to the board, main board, then main board go to the AGM with those suggestions. Right? But here they have suggested remuneration committee comprised of non-independent, non-executive directors, and these directors or these committee should directly report to the company shareholders at the AGM, right? About the remuneration policies of the executives, right? Including full disclosure of the elements in the remuneration of individual director, right? So full element, what do you mean by full element? If director is getting a basic salary, how it's created, bonuses, vehicle allowances, or vehicle, sometimes the directors are having a vehicles from the company. All these information you need to present it in a detailed manner to the shareholders to look at and understand whether this director's payment is appropriate or not. That's the first recommendation which has been issued by the Greenberg committee. Then second one, the adoption of the performance measures linking rewarding to the performance of both the companies and the individual directors. So as I mentioned in the previous example, right, what happened there is now that my friend, so let's say I'm the one who's invested in the company, my friend is not performing because he's the manager. He's only getting a payment. He's not interested about the company's profit, right? So what we can do, we can link the director's payment with the company's performance, right? Right. Linking rewards the performance, both the companies and individual directors. So that interest of the directors and shareholders were more closely aligned, right? Because we have discussed if you can remember, in the agency theory, we have discussed there are two different people called principal and agent, right? Principal is having a different intention, agent is having a different intention, right? Or the interest. So that is why the conflict of interest is arise, right? As a strategy, what we can do, we can try to minimize this conflict, right? We need to we try to minimize that gap, right? So that's why one of the strategy we have suggested there is you need to link the performance of the company and both the directors, right? So if the company is performing only, the directors are getting a kind of a good pay, right? So then what will happen? Directors are also looking at the company's profitability, company's performance. So then the shareholders' intention and the directors' intention are becoming closer. It's aligned, right? It's aligned, right? Right. So otherwise, directors are getting a payment. So they are not worrying about the profit. So what they are doing, they are continuing like before, right? They are not looking at any performance sort of strategies, right? දැන් ඔයගොල්ලෝත් කම්පැනි එකට ගියාට පස්සේ right කම්පැනි එකට ගියාට පස්සේ දැන් මට හම්බෙන්නේ රුපියල් 50000යි. I'm getting only 50,000. So why I'm going to perform more to earn more profit to the company? I'm only getting 50,000, right? Even the company is making huge profit, I'm still getting 50,000. Even the company is making losses, I'm still getting 50,000, right? So then you are having a kind of a conflict of interest, right? So to remove that, what you can do is adapt the performance measures linking rewards the performance of both the companies and the individual directors, right? So those are the two suggestions or the recommendation issued by the Greenberg report, right? In the Cadbury report, they are discussing about the information flow, right? Information flow. Here in the Greenberg report, they are discussing about the director's payment. So basically, they have recommended two approaches. One is establish of the remuneration committee with the non-executive directors, and that committee is directly reporting to the remuneration. Oh, sorry, the shareholders, right? Shareholders. And also, the second recommendation they have given is you need to link, because the director's intention and the director's interest and the shareholders' interests are not aligned. So you need to try to align the interests. So that is why you can link the performance measures between both the companies with the individual directors. Then only directors are looking at the performance, right? So since that time in 1995, disclosures of the director's remuneration has become quite prolific in companies' accounts. Right, right. So therefore, in the 1995, in the company's account in the UK, the disclosure is the people are looking at this disclosure, the director's pay. කොච්චරක් නිකම් මෙහෙමනේ මගේ සල්ලි අරගෙන කොච්චරක් මම මගේ කම්පැනි එකෙන් ප්‍රොෆිට් ගන්නවා කියන එක ගැන මිනිස්සු හරියට කන්සර්න් වුණා ඒ කාලේ. right, right. එතකොට ඒක ඒ හින්දා මේ disclosure ගැන ගොඩක් අවධානයක් ආවා. That is why the Greenberg report has been issued by the Greenberg committee, right? Right. So then, so we are coming gradually 1992, then 1995, then 1998, right? Humble report, right? In 1998, the Humble committee followed up matters rise in the Cadbury and the Greenberg reports, aiming to restrict the regulation burden on the companies and substituting principles that detail wherever possible. The intention was the current listing rules, which require listed UK companies to confirm their compliance with and explain any non-compliance with the Cadbury and Greenberg codes will be replaced by the rule required companies to disclose how the companies apply the corporate governance principle through a statement. The accounts should explain their policies, including any circumstances justifying departure from the best practices. Right. Right. So therefore, there are some restriction is there in the two reports from Greenberg reports and the Cadbury reports. So therefore, the Humble report is providing some release to the companies. So that what they are doing is they are telling that company should disclose only what they have applied as a corporate governance principle through their statements. And if they are not apply anything, right? So you need to justify that circumstances why they have departure from the best practices, right? Right, because it has been released somewhat. The non-compliance thing is released, but when it's come to Cadbury report and the Greenberg report, it's kind of a strict rules are there, right? Strict rules are there, like remuneration committee should directly report to the shareholders. Strict rules, right? So therefore, then ගොඩක් rules තද කරොත් corporate governance rules තද කරොත් මොකද වෙන්නේ? Companies වලට listed අමාරු වෙනවා, right? It's hard to list. It's also a kind of a bad thing to the society, right? මොකද අපි ගත්තොත් එම රටක ආර්ථිකය ගැන කියන්න පුළුවන් එක දර්ශකයක් තමයි stock exchange එක, right? One index that we can tell about the country's economy is the stock exchange, right? Right? The kind of a major index, right? So if the stock exchange is performing, we can say the country economy also going in a good manner, right? Right. So therefore, if you are restricting the companies to registered or listed on the Colombo Stock Exchange, it's not good, right? So therefore, Apple report provides some relief to the UK companies. So they are saying uh, will be replaced by the rule requiring company to disclose. It says in the Cadbury and the Greenberg report, it says the intention was the current listing rules which require listed UK companies to confirm their compliance with and explain any non-compliance with the Cadbury and the Greenberg codes. But it has been replaced by rule requiring companies to disclose how the companies are applying the corporate governance code. And if you are departure from any best practice, you need to explain why. You need to justify the circumstances, right? Right. So that has been issued by the Hample report, right? So then, based on these three reports, right? Based on these three reports, they have issued a combined report, right? Then එක reports වල කියන්නේ එක දේවල් ඒ නිසා concern එකක් ආවා අපිට general එක report එකක් දෙන්න. දෙක එක code එකක් දෙන්න. right? අරගේ හැම්පල් රිපෝට් එක මෙහෙම කියනවා ග්‍රීන්බරි රිපෝට් එක මෙහෙම කියනවා කැඩ්බරි රිපෝට් එක තව එකක් කියනවා so there are three reports in from 1992 so then there's a concern is coming up right so whether what is the correct code we need to follow what is the best practice we need to follow so that's why the London Stock Exchange issued a combined code in 1998 which they have looking at that code is derived from the recommendation coming from the Cadbury, Greenberry, and the Hamper report. Right, right. So it has two sections, right? One name at the companies and another name at the institutional investors. Right in that report, in the combined code report, which has been issued by the London Stock Exchange, with the help of or with the it's derived from the recommendation from the Cadbury and the Greenberry and the Hample report, right? So they are having two aims, two sections, one name at the companies and one name at the institutional investors, right? See, so we already know who are the institutional investors. Institutional investors are the companies, right? Institutional investors are the companies which has been invested in other company, right? Institutional investors, right? The combined code operates on the comply or explain basis mentioned earlier, right? In relation to the internal controls of the business, the combined code states that the board should maintain a sound system of internal control to safeguard the shareholders, right? Right. One recommendation done in the combined code is you have to protect the shareholder. To protect the shareholder, you need to safeguard the assets of the shareholder, right? Assets of the shareholder. So therefore, it says the board should maintain a sound system of internal control to safeguard the shareholders. Right? As a board, you need to have a good or better or best internal control system to safeguard the shareholders' assets or the money or the investments. Right? The director should at least annually conduct a review of the effectiveness of the group system of internal control and should report to the shareholders that they have done so. Right? So because you need to have a good sound system, even though you are having a sound system, you need to do the monitoring part, whether these things are actually performing accordingly. So what you can do, you can review, right? You can review, you can have a kind of a annual review, at least annually. If it is possible, you can have 3-2 meeting annually. At least annually, you have to look at, you have to monitor the control system and they have to report it to the shareholders. If they have find out any kind of deficiencies, what are the good things, what are the control mechanism, right? All these things you have to report to the shareholders, right? Report to the shareholders, right? Since the publication of the combined codes, a number of reports in the UK have been published about specific aspects of the corporate governance. In Turnbull Report 1999, which has been revised in 2005, focus on the risk management and the internal control. Right? Even though your combined code has been issued, there are different corporate governance codes are issued focusing on different aspects of the corporate governance. So Turnbull report is focusing on the risk management and the internal control. And Smith report, which has been issued in 2003, discuss about the role of the audit committee. And the Hitch report is discussed about the role of the non-executive directors. Right? Right. So based on this combined code, there are three different reports has been issued by looking at three different approaches or three different aspects of the UK corporate governance codes. The Turnbull report is looking at the risk management and the internal control. Smith report is looking at the audit committee, and Hitch report is looking at the role of non-executive directors. So in your examination, what I'm asking is I'm giving the name of the report and I'm asking what they have recommended. Right? So you have to remember what report says what. Right? For example, Smith report is discussing about the audit committee. Right? So we will discuss about these reports as well. Right? Right? So then the convergence of the international guidance, right? Because of increasing international trade and cross-border links, there's a significant pressure from the development of internationally comparable practices and standards, right? So even though UK is having a kind of a specific discussion regarding the corporate governance codes, so other countries are claiming that, right? We can't go with the UK corporate governance codes. We need to have a kind of an acceptable global code, right? Right, because of the cross border links, right? If companies, the countries are working with other countries, so you're having a cross border links, right? And also there's a kind of a international trading is happening, right? We are doing the international trading, and as a Sri Lanka, we are doing the international trading, and we are connected to the US, China, likewise, right? So likewise, other countries also looking at the they are also dealing with the international trading, right? Right. So that now there's a kind of a problem is going on with the Iran and Israel, right? How many of you in the Iran side? How many of you in the Israel side? Yes, Iran and Israel. So those who are in Iran side, yes, can raise your hands. You are supporting Iran or Israel, guys. අපි කාටවත් සපෝට් කරන්න නැහැ. අපි හිතාගෙන ඉන්න හොඳට අපිට මොන වුණත් මොකද නේද? ගහගත්ත කියලා අපිට වැඩ නැහැ. Yes, guys. Okay, there are three people are there in the Iran side. You are on the Iran side, right? Right. Who are the people in the Israel side? Israel. කවුරුත් නැහැ ඉස්රායලට. One. Okay. Only one. Okay. Two. One, two. Right. Great. Right. So I'm in both the sides. Why? Right. Why? So when it's come to Iran and Israel, right? These two countries actually help us in a different sort of incidents. So one is when you are having war, right? We are having a civil war, no? Right? Which is not, which actually it's also happened because of the politicians, not because of the Tamils and the Sinhalese, right? Because it's happened because of the politicians, right? As a politicians kind of agenda, that's why that war is happen, right? So when it comes to war, right? So we are having 30 years of war now, right? It's very bad thing, right? So because of this 30 years of war, right? So Israel help us as a country. Israel has helped us providing a Kafir jets. They have provided a few Kafir jets to us. The fighting jets, right? That will be help very much in the war period. That's one thing from the Israel side. Then one point for the Israel, right? Right. So first of all, we need to look at what are the benefits from them. Then only we can support, right? Then when it's come to Iran, right? When it's come to Iran, they have provided us a kind of a project called Umayyad, right? If you don't know, some of you I think know Umayyad. So in that project, right, they are providing. It's a kind of big project. I think the value of the project is more than uh, 500 million USD or something like that. 500 million, right? It's a big amount, right? Right. So Iran is funding that, right? Umayyad project. It will benefit to the Sri Lankan economy and the villagers, the country people, right? And since they are providing a funds and what they are doing is they are telling that okay, we will provide the funds. What you have to do is you need to supply a tea to us, right? And Sri Lankan government needs to pay to that tea amounts, like tea production for the local companies. අපිට tea දෙන්න අපි මේ funds ටික ඔයාලට දෙන්නම්. ඒ tea වලට ගෙවන්න ගාන ඔයගොල්ලෝ ගෙවන්න. ඒ companies government එකෙන් ගෙවන්න. So that's how we are repaying the loan for the Iran. That's a 1 point to Iran then, right? With our production, we are paying our tax. We are paying our loan, right? That's a good approach. 1 point to Iran, right? Right. So when it's come to the Israel, I think more than 5% or 6% people are working in the Israel in Sri Lankans. Right? They are generating the dollars to Sri Lanka. Right? Right. So then the 1.2 is Israel. Right? So when it's come to the Iran, right? So they are actually working closely with Sri Lankan economy, right? Because they are the main buyer of tea, right? Right. So they are getting tea from Sri Lanka, right? So therefore, uh, because of the Iran as Iran is a kind of a buyer, no? So they are helping us to the economy, right? And also they are providing the what do you call the gasoline, right? Right. What you call the petrol and diesel, right? So that's also kind of a concern when it comes to Sri Lanka. So 1.2 Iran as well, right? So now it's telling, right? So what we have to do is, right? War is not acceptable anymore, right? Yes, it is one, right? So when you're looking at now the Iran is firing Israel, Israel is firing Iran. So now the America also got engaged with that incident, and South Korea is also coming up. So now you are enjoying, right? So think about the Jordan, right? Jordan. So when you're looking at the map, right, world map, Jordan at the middle of these two countries, right? ඔගොල්ලෝ බලන් ඉතින් දැන් යෝර්දාන් වල ඔගොල්ලෝ ඉන්න නම් අහස උඩින් යනවා. කොයි වෙලාවෙ කඩේ දන්නේ නැහැ. Right? So likewise, if it is become a kind of a world war, right? Right? It will impact the Sri Lankan economy. That means it will impact you. Right? බැරි වෙලා හරි ඔය යන ගමන් මිස් වෙලා බෝම්බයක් වටනොත් එහෙම ලංකාවට මොකද වෙන්නේ? right නිකන් වැරදිලා අර දැන් ඉන්දියාවේ ප්ලේන් එකට උනේ right ඒකේ තාම රිපෝට් එක ආගෙන ඉස්සුව එක තියෙන මම හිතන්නේ pilots are issue එකක් තියෙන්නේ. ඒක human error එකක් තියෙන්නේ. It's a human error. Right? Pilot වැරදි මේක දාලා කියලා තමයි කියන්නේ. leave එක. Right? I don't know exactly, but most probably it's a human error. Right? So likewise, when let's say when Iran is carrying a bomb to Israel, or let's say the South Korea, that Guangzhou, someone, that leader, he's carrying a bomb to put it to the Israel, right? What will happen? Mistakenly, when they are going in the Sri Lankan sky, right? Mistakenly, bomb has been released. What will happen to Sri Lanka? All the Sri Lankans will be vanished in 1 second, right? So therefore, war is not acceptable, right? It will impact to us. So don't enjoy with the war, right? Right? Even though you have studied so much, so hard, right? Still 1 second, because of the bomb, everything will be vanished, right? So don't support to the war. I don't mean for the countries. Don't support to the war, right? So war is actually not acceptable thing. It will impact to the whole country's economy, whole world, right? Right. So that is why as for my opinion, right? So we need to propose peace to these two countries, right? There are some political issues are there, right? But we need to support both the countries to make the peace, right? So that's what we have to do, right? Right. Right. Still, it's a kind of enjoyable thing sometimes because when you're looking at the rocket launch and sometimes the war is kind of enjoyable thing. And it's because it creates some sort of what do you call the excitement, no? Right? So it is good to movie, but when it's come to real life, it's not good. Right? Right. So therefore, support both the countries to have the peace. That's my opinion. Right? So why I'm coming to that one is because people are discussing about the international courts because they are not say they are saying that we can't go with the UK courts because it's specific to the UK. So sometimes because of the different circumstances, different perspective, different approaches of different countries, we need to have some sort of a common code. Like when it's come to financial reporting, we are having the IFRS, right? Even though in the USA we are having a gap, but when it's come to world, IFRS is the most acceptable principle when it's come to financial reporting. Likewise, in the corporate governance code also, they are suggesting an international guidance, right? Accounting and financial reporting is one area in which this has been occurred, right? Increase in international investment and integration of international capital markets has lead to pressure for the standardization of corporate governance guidelines as international investors seek reassurance about the way their investments are being managed and the risk involved, right? Even though the local companies are, we are having a local companies, right? International investors are investing in those companies. For example, as we discussed, the Bogle Graphite Lanka, right? It has been managed by the German company. The German investors are invested in the local company, right? So if you are not following the international accepted corporate governance codes, so we can't assure the international investors can't assure their investments. So then they are not coming to invest in this country. So therefore, we need to have a kind of a standardized corporate governance guidelines, right? Corporate governance guidelines to work with, right? So that is why this international corporate governance codes has been established, right? So when it's come to the corporate governance, the major corporate guidance are the corporate guidance. Then we are coming to the international guidance, include OECD principles and the ICGN report, right? So the reason for having this international guidance is because we are having a cross cultural links, international trades. So therefore, uh, like local investors, we are having foreign investors. So therefore, both of them looking at a kind of a common corporate guidance guidelines to reassure their investments. So that's why the international guidance has been issued. Right. Right. So I'm going with the OECD guidance. Right. First of all, I'm going with the OECD guidance. Right. The Organization for Economic Cooperation and Development, we call it as OECD, the Organization for Economic Cooperation and the Developments, right, has carried out an extensive consultation with member countries and developed a set of principles of corporate governance. So they have done some sort of OECD is a kind of organization, right, which comprise of different countries. So they have issued a corporate governance guidance. Before that, what they have done is they have doing some sort of a survey or consultation with the member countries. And they have developed a set of principles for the corporate governance that countries and companies should work towards achieving. The OECD has stated that its interest in corporate governance arises from its concern for the global investments. So what they are looking at, their major intention is the global investments, right? Because local companies getting a global investments. So then the OECD guidance is providing the assurance for these global investments through their corporate governance codes, right? So their main intention, their main concern regarding this guidance is the global investment, how we are protecting the global investments to the corporate governance codes, right? Corporate governance arrangements should be credible and understood across the national borders. Having a common set of acceptable principles is a step towards achieving the same, right? Right. Right. As we discussed, right? Why you need to have a common guidelines or the common principles? Because you need to have a kind of a you need to develop a kind of understanding across the national borders. Why we need to have IFRS? Why we are having a kind of a common principle for the financial reporting? Because the global investors also understand what happened in the companies. The common language should be there. Right. දැන් අපි ගත්තොත් එහෙම අපි ගිහිල්ලා සිංහල කතා කරොත් එහෙම සුද්දන්න තේරෙන්නේ නැහැ. right. අපි ගිහිල්ලා දෙමළෙන් කතා කරොත් සුද්දන්න තේරෙන්නේ නැහැ. right. ඒක අපිට තියෙනවා common language එක. ඒ නිසා තමයි English use කරන්නේ. right. Likewise, when you are going with the corporate governance codes also, you need to have a common language. So that's why this global guidance has been issued to establish the credibility and the understandability. Right. Having a common set of accepted principles is a steps towards achieving these two aims, understandability and the credibility. The OECD developed its principle of corporate governance in 1998 and issued a revised version in April 2004. Right. So they have firstly issued that report in 1998 and they have issued a revised one in 2004. Right. So I will upload these all the reports to the LMS. Right. If you have time, you can refer. Right. Reports, you can refer it. So they are non-binding principles intended to assist the governments in their effort to evaluate and improve the legal, institutional, and regulatory framework for corporate governance in their countries. What do you mean by non-binding? Yes, non-binding. What do you mean by that? Non-binding principles. What do you mean by that? Non-binding means yes, guys, non-binding. What do you mean by non-binding?
rules වලට මේ යටත් වෙලා ඉන්න ඕනේ කියලා මේ කියන්නේ බයින්ඩින් එකක් නෑ කියන්නේ මේ ඒක අනිවාර්යෙන් කරන්න ඕනේ කියලා එකක් නෑ කියන එකක්.
Yes, correct, good. That means simply it's not legalized. Right. So if it is a binding principle, definitely companies should follow. Right. As we discussed, the corporate governance principles are non-binding. That means it's not legalized. Right. That means people can either comply or explain. Right. So they are non-binding principles intend to assist what their intention. They need to assist the government to improve their legal, institutional, and regulatory framework. Right. So that is the main intention of this OECD guidance. Right. So now we are looking at the OECD principle. This is a testable question in your examination. Right. OECD principles because it's related to us as well, our country, the Sri Lankan companies. The OECD principles are grouped into 5 broad areas. Right. The first one, the right of shareholders. Right. OECD principles අපි broader areas පහකට categorize කරනවා. පළවෙනි එක තමයි right of the shareholders. Right? Because always why the corporate governance codes are there to protect the shareholder. Right? To protect the shareholders' assets, protect the shareholders' money. Right? So therefore we are discussing this in a 5 broad areas. Right? 5 broad areas. Right? The first one is right of shareholders. Right? The right of shareholders. Shareholders should have the right to participate, vote in general meeting of the company, elect and remove the members of the board, and obtain relevant and material information on a timely basis. Capital markets for the corporate control should function in an effective and timely manner. Right? So that is one of the right of the shareholders. Right? What they can do, they have a right to participate with the general meetings and they can vote. Right? That's the thing you need to have. Shareholders shareholders පුළුවන් වෙන්න ඕන annual general meeting වල participate වෙන්න සහ ඒකෙදි vote කරන්න. Right? සහ ඒගොල්ලන්ට පුළුවන් board members ලා elect කරන්න සහ remove කරන්න if they want. Right? Board members ලා පත් කරන්න නැත්නම් අයින් කරන්න. And also to take decisions they need to have a relevant material information. Right? අදාළ ප්‍රමාණාත්මක තොරතුරු තියෙන්න ඕනේ හරි වෙලාවට. Right? 2024 උන එකක් 2025 අන්තිමට හම්බෙන්න බෑ. Timely information should be there. The information should be accurate, that means relevant, and all the material information should be revealed to the shareholders. That's their right. Right. And also when it comes to capital market like Colombo Stock Exchange, right? They're having a kind of a control to function in efficient and timely manner. Right? For example, for the shareholders, Right. Sorry. There's a electricity failure because the bad weather is going on. Right. Sri Lanka is a kind of a developing country, so still. So we're having some electricity issues. Right. Right. Can you hear me? Can you guys hear me? Yeah.
Yes, sir.
Yeah. I'm coming with the hotspot. So therefore sometimes some delays can be happen. So if it is happening regularly, please inform me. Right. Right. So what we are discussing is the principles. So under the principles, the first principle, the right of shareholders, right? The capital markets should function in the effective and timely manner. For example, when it comes to the Colombo Stock Exchange, right? So they are maintaining that the annual report uh, should be issued kind of a time, right? There is a particular time is there. For example, for the listed companies, you need to issue the annual reports within the 3 months of period after ending of their year end, right? So likewise, they are having a kind of plan as a capital market to ensure the right of shareholders has been achieved, right? So that is the first principle, the right of shareholders, right? Then the second one is equitable treatment of the shareholders. So, for example, so when it's come to the this has actually happened in Sri Lanka, right? So when you are looking at the companies, right? When you are looking at the companies, right? So there are some minor shareholders also there. For example, as I mentioned before, if you want to learn about the shareholder, if you want to learn about the Colombo Stock Exchange, you can invest 10,000 rupees in the Colombo Stock Exchange, right? So then you will become a minor shareholder, right? You are become minor shareholder, and you're only getting a minor shareholding, right? Even though you are a big shareholder, even though you are big, have a big share, you are having a kind of a big share in the big companies. Even though you are a minor shareholder, people are not looking at you. People are not listening to um, your concerns, right? But when it comes to OECD principle, it says either you are a minor shareholder, either you are a big shareholder, right? You need to treat equally. All the shareholders of the same class of shares should be treated equally, even though you are having only one share, even though you are having 100 share, even though you are having 1,000 shares, 100,000 shares, 1 million shares, all these people should treat equally, including minority shareholders and overseas shareholders. Right, right, right. Independent to the cost broader shareholdings should be eliminated. Right. Sometimes when it's come to the some companies, they are not treating the overseas shareholders in a good way. Right. They are not looking at their concerns. Right. But when it's come to OECD principle, it says you need to equally treat the shareholders, all the shareholders. So that is the second principle you need to remember. Then the third principle, the role of stakeholders, or the we can say right of stakeholders, right? Because here they have mentioned it as a role of stakeholders is because the stakeholders is having a role to protect the company. So when they are having a role to protect the company, what we have to do as a company is we need to ensure the rights of the stakeholders has been protected, right? That's why it says the role of stakeholder, right of stakeholder should be protected. All stakeholders should have access to the relevant information on the regular and timely basis, right? If you are a stakeholder of a company, right? If you are requiring some information of the company, that information should be accessible in a timely manner. For example, when it comes to government, right? When it comes to government, so government is interested about your profit. They are looking at the tax, right? So what you have to do, you need to file the tax return in a timely manner, right? To the Inland Revenue Department, right? So that is how the stakeholders are protecting you, and then the stakeholders will come in and protecting you as well. Right? You are protecting stakeholders, and stakeholders will protect you. For example, the suppliers, one of the key stakeholder, Right? Let's say we are having only one supplier, main supplier. So we need to provide the relevant information to the supplier. Right? We need to provide the quotation on time. We need to provide the correct pricing, right? So then only that supplier will provide the materials, right? Once we have protected the right of the stakeholder, then they will protect us, right? Performance enhancing mechanisms for the employee participation should be permitted to develop. Stakeholder, including employees, should be able to freely communicate their concerns about the illegal or unethical relationship to the board, right? Like for example, when it's come to employees, right? When it's come to the employees, they need to have a kind of a free communication platform to come up with their concerns about the illegal or unethical relationships within the company, right? That is the third principle under the OECD principle, right? Right. Next one, disclosure and transparency, right? That is very important. Timely and accurate disclosures must be made of all material matters regarding the companies, including the financial situation. For example, let's say we are having a law case, right? But we are not reported in the financial information, under the financial information, because it's not happened yet. But under the disclosures, you need to report there's a kind of a concern regarding a law case, right? So there is a kind of financial impact will coming up in the future. That should be disclosed, right? So therefore, timely and accurate disclosures should be there regarding the company's financial situation, future risk. For example, they are getting a new competitor in next year, right? That if the new company is coming up to Sri Lanka, it will impact to the company in a bad manner. So you need to focus on that. You need to focus what kind of things will be impacted to the company, what kind of impact the companies will have to face, right? So therefore, that those sort of things you have to disclose. Foreseeable risk factors you need to disclose. Issues regarding the employees and other stakeholders and the government structure and the policies, right? So when it comes to Sri Lankan companies, most of the companies, what they have faced in during last few years is human resource issue, right? Human resource issue, because most of the human resource is going abroad, right? දැන් කවුරු හරි talented කෙනෙක් ඉන්නවනේ එයා අනිවාර්යෙන් පිටරට යනවා ලංකාව දාලා, right? ඉන්නේ නැහැ ලංකාවේ, right? ලංකාවේ ඉන්න බෑනේ, ඒ නිසා ලංකාව දාලා යනවා, right? එතකොට මොකද වෙන්නේ? කම්පැනිස් වල තිබ්බ ලොකුම issue එක තමයි human resource issue එක ලංකාවේ, right? පහුගිය අවුරුදු කිහිපෙ, right? So they have to report those things under the disclosures, right? We are having a kind of issues regarding the human resource management, right? We are lacking with the key management person, right? Right. So those people are going, right? So all those information should be disclosed to the shareholders, right? Even though that is not a financial information, so you need to disclose and keep the transparency. Right. The company's approach to disclose should promote the provisions of analysis or advice that is relevant to decision by the investors. Right. Because these disclosures will help the investors to make their decisions. As with not only the financial figures, but also the non-financial figures are most important to take decisions. Right. Take decisions. So therefore, these disclosures are very important. Timely and accurate disclosures should be there. Right. Material matters should be reported or disclosed. Keep the transparency. Right. That's the fourth principle. Then the last one, the responsibilities of the board. What kind of a board responsibilities having? The first thing we have discussed, board should be discussed only about the strategic guidance, strategic matters we have discussed. And also they need to look at the effective monitoring of the management. Below them, they are having a management, right? Under the CEO, they are having a management people. So you need to monitor those people. Monitor these people and those controls, right? Monitoring, strategic guidance and monitoring of the management. That is the two key main responsibilities of the board. Board members should act on a fully informed basis in good faith with due diligence and care and in the best interest of the company and its shareholders, right? As a director, right? As a management, as a board of director, board member, you need to work in a best interest. That is very important. Best interest of the company, not your best interest of the company. Company's best interest. You need to behave in the best interest of the company, not your own best interest. And also its shareholders. They should treat all shareholders fairly. The board should be able to exercise independent judgments. This includes assigning independent non-executive directors to appropriate tasks. Right? Right? All the shareholders who have to treat fairly, and board can able to take some independent judgment. To take that independent judgment, you can have the independent non-executive directors, and they can appoint a appropriate task. Right? So those are the 5 principles under OECD principles, right? Right, OECD report. The 5 principles, the broader 5 principles. So this is definitely tested in your examination, right? Under the corporate governance international codes, right? Okay, any questions? Any questions? Up to now, any questions? Any practical sort of questions? Guys, can you hear me, right? You can hear me clearly, right? Okay, any questions? Prakash, any questions? Prakash is there. Yes. So in the online platform, this is the most unpleasant situation, right? Because what I'm doing is I'm looking at the screen and I'm talking to myself. You guys are not talking, right? Yes. Any questions?
sir, ಅದು online.
Sorry.
ಅದೇ sir online tipo.
Mugad.
ಅದೇ sir online lecture ka tibigilan.
Others.
Oh, ಅದೇ mi online lecture ka tibigilan ಇದು.
Rasni.
Oh, sir.
So actually, because of that, my personal reason, so I make it online. Only for this week, right? So next week onwards, we are having physical lectures. Why it's a issue? I think you like to have online sessions.
Yes.
Is it issue?
නෑ නෑ sir අවුලක් නෑ.
All right. So only today we are having online sessions. So next week onwards, we are having physical sessions, right? Only for this week. Right. So if you don't have any questions, so let's have a 5 or 10 minutes of break. So then we will discuss the rest of the part, right? Right. Let's have a 10 minutes of break. I'll be back in 9:36, 9:45. Right. I'll be back. Oh, 9:50. Okay. Sorry, 9:50. So let's have a kind of a interval, right? Right. All right. So we have discussed about the OECD principles under the global corporate governance principle. So then we are moving on to the next report, which will be coming under the which is coming under uh, the global corporate governance codes. Uh, the ICGN means the International Corporate Governance Network, right? So that network has been issued a report in 2005, and this is the most latest one, right? Latest report, which has been revised in 2009. And the aim is to enhance the guidance produced by the OECD. So OECD principles has been issued in 1998. So the intention of this report is to enhance the guidance which has been produced by the OECD report, right? The purpose is to provide practical guidance for the board to meet expectations so that they can operate effectively and compete for scale capital efficiently, right? Or effectively, right? So the main purpose of this report is to provide some guidelines, right? Provide some practical guidelines, right? Not like theoretical ones, the practical guidance for boards to meet expectations so that they can operate efficiently and compete for scale capital effectively, because we know we are having scale capital, right? When it comes to the stock exchange, right? What the companies are looking at the capital, right? There are scale capital is there. The company should acquire or get. So those scale capital, that is the work of the board directors, right? The ICGN believes that companies will only achieve value in long term if they manage effectively their relationship with the stakeholders such as employees, customers, local communities, and the environment as a whole. Right. So now, when you're looking at the 1998, so we are mainly focused on the shareholders. Right? We are mainly focused on the shareholders. But when it comes to ICGN report, so they are saying that how companies could create the value to their companies, or how they are going to achieve this value creation in the long term. They need to look at the relationship with the stakeholders, not only the shareholders, stakeholders. All the stakeholders, you need to create some relationship that then only company can earn kind of a company can generate some value company can create some value uh, towards to the shareholders intention in a long term, right? So the ICGM report is more focused on how we are going to maintain a relationship with the stakeholders such as employees, customers, local communities, and the environment, right? So in the ICGN report, they have provided guidance emphasizing the following points. So they are looking at the board responsibilities, shareholder rights, stakeholder relations, transparency and the disclosure, risk management, that is our discussion in the next week onwards, ethical conducts, uh, that is also our discussion in the next week, executive remuneration, sustainability and ESG consideration, audit and assurance. You can see there are new sort of things are coming up in the ICJ report, the risk management, ethical conduct, stakeholder relationships, sustainability and ESG consideration. So these are the new aspects which is coming under the ICGN report. I will upload this report to you to refer, and what other things are there, so you can refer from that, right? So then, so these are the two general codes we are having in the global context, ICGN and the OECD principles. Right? We are not going to discuss these things thoroughly because when it comes to examination, only one sort of question I can ask, one area, right? I can ask, right? And I'm not going to going in a much further discussion. So for additional information, you can refer because you are a university students. You have to refer and you can get more knowledge through the referring, right? So I will upload those documents to refer, right? And significant of the international codes, why we need to have a international codes. Codes such as OECD codes have been developed from best practice in a number of legal aspects, right? Number of legal aspects in there in the different companies. As such, they can be seen as representing an international concessions. They stress global issues that are important to companies operating in a number of legal context. The OECD code, for example, emphasizes the importance of eliminating, right, to cross-border shareholding and treating overseas shareholders in a fairly, right? Right. So those are the reasons why we need to have international acceptable codes. Although the OECD code is not binding, its principles have been incorporated into national guidance by the number of countries. The OECD principles have also been used by such organizations as the World Bank as a basis for assessing the corporate governance framework and practice in individual countries, right? So since the OECD principle is non-binding principles, so most of the countries using these principles into own their own corporate governance codes, as well as the World Bank also using this as a matrix, right, to assess the company's performance, corporate governance sort of performance as a framework. The World Bank is using this, right? So these assessments are used to determine the level of policy dialogues with the technical assistance given to these countries, right? So that is why these international codes are very important. The facts that the local codes of different countries are based on the same international codes means that compliance costs for the companies who are operating in many legal aspects will be reduced. Since you are having a kind of a common corporate governance things, right? It will reduce the compliance cost. For example, let's say example is a Damro, right? So Damro is a Sri Lankan company, right? So this Damro now it's moving to different other countries, like they are moving to the Europe, they are moving to the New Zealand, they are moving to the Australia, they are moving to different other countries, right? Right, India likewise, right? So when they are moving, when they are expanding their business to other countries, if you are having a kind of international accepted corporate governance code, it will reduce the compliance cost, because if you are moving to that country, you need to definitely comply with their country's law, right? So if you're having the same kind of a corporate governance codes in every other countries, so compliance costs may be very less, right? That's a kind of a benefit because of this international codes. The development of international codes should also be seen in a context of the development of robust financial reporting rules, since um, investors' concerns with the unreliable accounting information has made by they have questioned the corporate governance arrangements. Development in the international accounting standards aim to promote greater international harmony in accounting practices, and international convergence on governance is consistent with this, right? Right. So that is why you need to have a kind of an international acceptable code, right? Right. So this is what I need to discuss regarding the international corporate governance codes, right? So it's a kind of a basic idea. We have mainly discussed about the major corporate governance guidance. We are having UK corporate governance codes and the international codes under the UK corporate governance codes. We have discussed about the three different reports. So these three different reports is having a kind of a three different intentions. So then we will discuss about the combined codes under the UK corporate governance codes. Then we are moving on to the international codes, because we need to have a kind of a internationally accepted common code for the corporate governance. We have discussed about the OECD and ICGN report, right? So there we have discussed about the principles of OECD and ICGN principles as well, right? So these things you need to remember when you are going for the examination, right? Right. So with that, any questions you are having regarding this discussion? A kind of a small discussion. Yeah. Any questions? Yes. Any questions? Any concerns? Guys, can you hear me?
Yes, sir.
Any questions? Nothing? Nothing like anything. Right. All right. Okay. Then I'm moving on to the PDF document I actually shared with you, which is mainly okay. Can you see my screen? Yeah. I will open this with right. Okay. So this is also one of the major questions that I can ask from you, right? Importance of the international corporate governance code. What is the importance of having a international corporate governance code like OECD and ICGN? International corporate governance codes such as those from Organization for Economic Cooperation and Development, which we call it as OECD, and the International Corporate Governance Network (ICGN) are important even when the local governance codes are available because they provide a broader, harmonized framework for corporate governance that address the challenges of globalization. So, since we are working in a globalization market, globalized market, so we need to have a kind of broader concepts and harmonization with the different frameworks, even though we are having a uh, local framework. For example, when it comes to Sri Lanka, we are having the best practices of corporate governance, which has been issued by the Sri Lanka, right? Which has been issued by the Sri Lanka. So those corporate governance codes provide provide some guidance to the Sri Lankan companies, but uh, as we are having a local thing, we need to go with the global principles as well, right? Because we need to maintain the harmonization, the broader concepts, because we are working in a globalized market, right? So these international codes complement local regulations, ensuring the consistency across the borders, especially for the multinational corporates that operate in a multiple legal aspects. Here's a breakdown of their needs with an examples. So this is a kind of a question. What you have to do is you need to provide the importance of the international corporate governance course with the practical examples, right? That is what I'm expecting from you, not to write the importance directly, right? Because we all know uh, these are the important, but you need to provide some example, practical examples, right? The first one is a globalization and the cross-border operations. Many large companies or the corporates operate across multiple countries, often listing their shares on stock exchange in the various markets. For example, when it's come to uh, companies, the big companies, they are having a uh, companies in a different markets, different countries, and also they are listed in a different stock exchange, right? While local governance codes apply in each country, there can be significant difference in the requirement for the transparency, accountability, and the shareholder rights, right? So all these countries are having a local codes, local corporate governance codes, but sometimes there are some questions that arise regarding the transparency, accountability, and the shareholders' rights. So therefore, this international corporate governance codes provide some consistency, right? Oh, it provides some consistent set of standards that you can apply in global context. Because if you are dealing with the globalized market, right? So there will be an impact of globalization, right? For example, in your company, there will be some foreign investors. There will be some foreign institutional investors. So their expectations sometimes not align with the local corporate governance codes. So therefore, it's very useful to have some guidance from the international acceptable common corporate governance codes like OECDs and the ICGN, right? So that is one of the uh, benefits or the importance of having a global acceptable corporate governance code, right? So this is the example. Consider the multinational company like Toyota, right? So you can see in Sri Lanka also we can have a Toyota company, right? Toyota that operates in multiple countries that is listed on the stock exchange in Japan, the US and the Europe. So you can see the Toyota is listed in Japan, not only Japan, but also US and the Europe. Japan corporate governance codes might emphasize certain practices specified to its regulatory environment, such as specific board structure. In contrast, the US Sarbanes-Oxley Act, we have discussed the Sarbanes-Oxley Act, discuss about the key main areas, right? We have discussed uh, we discuss about the audit partner and the audit client engagements, right? Independent directors, audit committee. If you can remember, we have discussed, right? It's a rule-based approach in the US. Sarbanes-Oxley Act is focused on the rule-based approach, but when it's come to Japan, they are having a principle-based approach. Now, there's a kind of a conflict between the corporate governance context uh, when it's come to these two different countries. So therefore, in contrast, the US Sarbanes-Oxley Act focus heavily on the financial disclosures by adhering to the OECD principles of the corporate governance. Toyota can ensure that it meets common governance standards acceptable to global investors, enhancing the trust and credibility internationally while still complying with the local laws, right? So those are the one example you can provide, right? So you can, there are so many examples. So when you're writing, better to get an example and explain, right? Then the second benefit or important is consistency for the investors, right? International investors are often cautious about the governance standards because varying local practices can affect how they evaluate the risk and performance. If a company follows only the local code, it might appear risky to international investors who are unfamiliar with the local norms, right? So when it comes to Sri Lankan, what you call the local corporate governance codes, it's have a kind of a blend of locality, right? Sometimes it will not addressing the international investors concerns, right? International investors concerns. So therefore, um, it's better to have some adherence with the international codes like OECD and ICG. Companies can provide, through that companies can provide the transparency and assure the global investors that they are following a widely accepted best practice, right? So when you come to the example, then you can understand what I'm discussing here. An institutional investor based in US might hesitate to invest in Indian companies slowly governed by Indian Companies Act and the local SEB regulation because unfamiliarity with those systems, right? So in India, right, they are having Indian Companies Act and also SCBI regulations. That is the same as the corporate governance regulations they are having, right? So sometimes the US individual who's going to invest in the Indian company is having a kind of a concern that these companies act and the what kind of regulations are not very much familiar with them. So what we can do is, however, if that company also follow the ICG and global governance principles, the US investor is more likely to invest knowing that the company aligned with the internationally recognized governance standards. Right, right. Then rising standards and bridging the gap. So it's bridging the gap. So if it is create a gap between the international investors' intention or international market intention and the local course. So this international corporate governance course bridge that gap. Right, it will create some bridge between that gap. Right. In many developing countries or emerging markets, corporate governance standards might not be robust or comprehensive as in developed markets, right? Like in Sri Lanka, right? When you're looking at the corporate governance codes, right? It's not very much comprehensive than when you're comparing with the US. So when you're looking at the Sarbanes-Oxley Act in the US, it's directly saying that, right? As an audit client, you can't do anything other than audit in your audit client. If you are audit firm, you can't do any other engagement if you are doing audit in that audit client. That's a strict rule. But in Sri Lanka, if you are going to apply this one, it's not workable, right? Because we are only having three main audit firms, and they are having kind of a limited kind of a resources, right? It's very difficult to separate these, right? Because if you are going to apply the IFRS, what do you call IFRS 17, right? For the insurance contract, for the insurance companies, right? So these concepts are knowing only by these three audit firms in Sri Lanka, right? And also these three audit firms are doing the audit also, right? So it's very difficult to remove that external works, right? So when it comes to developing countries, when you are comparing with the developing countries corporate governance policies having kind of release point. But when it comes to developed countries, because they are having a, we have discussed, because they are having a good control environment, they are having kind of a ethical consideration, they are having good ethical behaviors, right? So they are having a kind of strict, strict corporate governance codes. That's why the America is following a rule-based approach, because they are having a good control environment, because they are having a good behavioral approaches, right? Right. So because of that, they are still following the rule-based approach, even though the rule-based approach is not there, right? But when it's come to developing countries like us, emerging countries uh, like some of the emerging countries like Nepal or the Thailand, right? Right. So still they are having a kind of a lack of corporate governance codes because they are not developed, right? Because it's not comprehensive like developed markets, right? So therefore, these international codes help set higher standards in these regions, promoting better management practices and accountability. These codes also encourage reform and improvement in the local governance practices over time. For example, in some emerging markets, local corporate governance framework may not fully address the critical issues like minority shareholder protection, right? The Sri Lanka, the same thing is happening, right? So you can feel, right, when you are investing in a company, let's say you are going to invest in the John Keel's holding, right? So one share, let's say 300 rupees. So you only having 1,000 rupees. So you are investing in a John Keel's holding, you are getting only three shares, right? Let's say four shares, you are having four shares. But when it comes to John Keel's holding, there are 2 million shares. So out of that 2 million shares, you are only having four shares. So you are a minor shareholder, right? So when the John Kills holding taking decisions and they are going with some major investments, they are not even inform you, right? They are not even informed because you are a minor shareholder, right? They don't care whether you are there or not, and they are only dealing with the major shareholders. So that is not acceptable. That is not acceptable under the global principles, under the OECD principle, because you need to treat every shareholder equally, that we have discussed under the principles, right? Or the board independence, sometimes these will not be there, right? A company listed on the Johannesburg Stock Exchange in South Africa might adhere to the King's 4 report for the governance, but it could also choose to adopt OECD standard to attract foreign investments and ensure that it meets global recognized benchmarks, particularly in areas where the local courts may not provide detailed guidance. So when it comes to South Africa, they are having the corporate governance called King's 4 report, right? So that is their local report, right? So if they are following that report, they also go with the OECD principles as well because they want to attract the foreign investors to their country, right? Right. Then, best practice sharing, that is the fourth important point. International corporate governance codes evolve based on the best practice and lesson learned from corporates worldwide. Right. When it comes to Sri Lankan local codes, right? So they are having the experience of only about the local companies. But when it comes to the global codes, right? Globally recognized code, they are having the experience with the companies all around the world in a different perspective, in a different culture, different environment, different economic background, right? So they are having a different sort of uh, markets. They are having different sort of experience. They are having different sort of lessons. So therefore, their corporate governance codes is adapted or amended using these experience practices or the best the things are coming in a best way. Those practices will be become a best out of best because they are having a so much of experience worldwide, right? So they can have a good practices than the local practices. By adopting international codes, companies and regulatory bodies can benefit from the wealth of experience and expertise that might not yet be reflected in the local governance codes. Right. So that's experience, that expertise will be matter uh, when it's coming to the corporate governance. In the local corporate governance, we are stick in the locally, we are stick in the local context. But when it's come to the global context, we are having a kind of a big experience, big lessons we are learning. We are having a big experience, expertise is there. That's will be create some best practices than the local codes, local best practices, right? For example, countries like Brazil has its own novo macro corporate governance codes, that is their local code. For companies listed on the B3 stock exchange, that is their stock exchange, Brazil's stock exchange, which is quite advanced for the local market. However, by also adhering to the OECD principles, Brazilian firms gain access to the best practices from the developed countries like the UK or Germany, which may offer insights into improve both evaluation, executive compensation, or audit processes, right? So that's a kind of important point when we are having a OECD principle on board, right? So we can share the best practices, right? Then regulations, sorry, reputation and the global competition. So we are globalized, right? Thanks to what you call, I can't remember the politician name. So we have globalized, right? Because thanks to that politician, J.R. Jayawardene, right? So we have globalized. So now we need to work with the global market, right? That's why you guys are uh, uh, going Australia, New Zealand to learn, right? We have globalized, right? That's why you are following a degree, then you are advancing to the master in different other countries, right? We have globalized, right? So because you are following a globally recognized course, it will create some reputation to your company. Your company is highly acceptable in a global market because you are following the global corporate governance codes. That will impact to your reputation, right? That will impact to your reputation, and also you can face to the global competition as well, right? You can face to the global competition. Companies that want to compete globally for the capital of the talent must demonstrate that they operates with the highest governance standards. International codes provide a seal of approval that they are committed to transparency, accountability, and the fairness, which are critically in the eyes of global stakeholders, right? So the issue is we are having scare capital. The companies are looking for capital. So how we can attract this capital? So we have to go to the global market. We need to enhance the pool of the shareholders or the stakeholders. So then only you can gather more money, right? For that, definitely you need to have a kind of a internationally acceptable corporate governance. It will create the reputation. It will create the global competition live, right? So you can compete with the global competition if you're having a globally acceptable corporate governance codes, right? So example, a company from a country which relatively weak local governance standards like Russia might adhere to ICG and global governance principles to improve its reputation and increase its attractiveness to the foreign investors, right? For example, the Sri Lanka also the same thing, right? When it comes to Sri Lanka, also the companies, when it comes to corporate governance codes, right? In the foreign market, they are not actually happy with the local corporate governance codes. Why? It's provides some weak guidance, right? Weak, it's provide a guidance, but people are not following. It will create some weak guidance. Not the principles are okay. All the principles are really well structured, but people are not following it because we don't have a good control environment and the ethical behavior. That's the main issue, right? So therefore, outsiders, that means the global market is not happy with that thing. So therefore, it will create some reputation damage to the local market, right? Local market. So therefore, what we can do as a company, we can say we are adapt not only the local corporate governance code, we have adapted to the international corporate governance codes like ICGN and the what do you call the OECD principles, right? So then it will improve the reputation among the international market. So the international market also, the foreign investors are coming and invest in the company, right? By doing so, it demonstrates the commitment to the international best practices that surpass what is required locally, giving it competitive advantage when raising funds abroad or forming partnership with foreign entities, right? So that's the kind of importance of having globally acceptable corporate governance codes in our company, right? So these are the five main importance why we need to adapt in the international corporate governance codes, right? So you can write with some examples. If you can search and if you can research about this importance and collect the example, that's better, right? If you can write a practical examples, you will get in more marks, right? Right. Any questions regarding this discussion? Yeah. Any questions? Guys, any questions? So I'm talking to myself for now more than 30 minutes after the break. No one is speaking. Yes. Any questions?
Sir, can you
Yeah.
upload the reading material Friday daytime so then we can get a copy of that?
Okay, sure. I'll upload, I will make it available on Wednesday. Every Wednesday, I will make it available. Sorry for that, okay.
Oh, thank you, sir.
Every Wednesday, I will upload before the lecture. Before the lecture week, I will upload on that week, Wednesday. Yeah. Any questions regarding things which we have discussed? Yeah, any questions? No questions? Great. Okay. So then I'm moving on to a question. So if you don't have questions, then definitely I need to have a question. Right. This is a kind of a comprehensive question, but it will cover our discussion, right? So it's the kind of a case study, but in your examination, I'm not going to ask such kind of a question, but this question will cover all the things which we have discussed, right? I'm only taking OECD principles and the importance of the corporate governance. So that's the two major area I'm looking at in the examination, right? But to gather the knowledge, I have incorporated this question. It will cover all the things we have discussed, right? So I just read the question first. Global Go Incorporation is a rapidly expanding technological company with operation in several countries. So this company is not operate in one country; it's operating in several countries. So base of this country is the UK. The base of this company is the UK, and is seeking to attract significant international investments to fuel its further growth. The company's board of directors is currently reviewing its corporate governance framework in light of its international ambitions and recent concern raised by some minority shareholders regarding the executive remuneration and the transparency, right? So therefore, since their expectation, the strategic goal to move to the global market, like international market, right? So there are some concerns arising regarding the minority shareholders and also the executive remuneration and also the transparency of the financial statements, right? Right. So in the first question, drawing on the evaluation of the UK corporate governance scores, explain how the Calbury, Greenbury, and Hampton reports collectively shape the principles and practice of the corporate governance in the UK. Discuss how the recommendations from these reports were eventually considered into the combined code. Right, right, right. So that is the question. Right there, you have to highlight the Cadbury report, Greenberg report, Hampton report, and the combined codes which we have discussed. Right. So let's look at the answer. Right. The evaluation of the UK corporate governance code was respond to criticism regarding the corporate governance matters, including concerns about the executive remuneration and the lack of information for the shareholders. Right. Right. The first report, it's based on the criticism arise because of the executive remuneration. There are some reports. These reports are issued because of the few reasons, few concerns. The one is first criticism is the corporate governance matters, and they are having some remuneration issues regarding the executives and the information which is shared to the shareholders. The Cadbury report is issued because of the information. There is a lack of information which has been issued to the shareholders. Right. The Cadbury report 1992 formed in 1991 made recommendation focus on the main board operation and establishment of the composition of the new board committees, the importance of the non-executive directors, and the reporting and control mechanism of the business. These are the four recommendations they have done. This recommendation emphasized the principle of openness, integrity, and accountability of the directors to the shareholders. It also introduced the comply or explain mechanism for listed companies in the UK. Following the capital report, it established the principle for determining directors' pay and detailed disclosures for the annual reports. Its central aim were to strengthen the accountability and enhance the directors' performance. Achieving through remuneration committees comprised of independent non-executive directors and the adoption of the performance measures linking rewards to companies and individual directors' performance. Subsequently, the Ample Report 1998 aimed to reduce the regulatory burden by substituting principles for detailed rules, building upon matters raised by the Cadbury and the Greenbury. The intention was to replace the existing listing rules with requirement for the companies to disclose how they apply corporate governance principles and explain any departure from the best practice. The recommendation from these three reports were taken consolidated into the combined code in 1998 issued by the London Stock Exchange. This code has two sections, one for the companies and one for the institutional investors, and also operate on the comply or explain basis. Right. So all the things which we have discussed, you have summarized into one question. Right. So this question is basically asking the ACC exam, right? The same type of question, but I have done some changes. Uh, so answer they have provided this, right? So they have clearly highlight each of the reports and how it's converted in the combined report, right? How it's going to the combined report, right? Right, right. Okay, write the answer for the second question, then we will discuss. So otherwise, you are just listening to my uh, yeah answer for this question. I'll just read the question. Global Go Incorporated is particularly concerned about the shareholder relations. Advise the board on how the comply or explain mechanism as introduced in UK corporate governance codes. Corporate governance could be applied to enhance the transparency, accountability to its shareholders, especially addressing the concerns about this executive remuneration. Right answer. And you have to upload this answer to the Dropbox. I will create Dropbox, right? Write the answer and I will pick some volunteers and you have to answer. Right. Any volunteer? They have to answer. Right. I'll just explain, right? Because I know there's no volunteers. For global go incorporation to enhance the transparency and accountability, particularly concerning the executive remuneration. It can, because they are having a kind of a concerns regarding the executive remuneration. So to enhance that, to enhance the transparency about the executive remuneration, it can leverage the comply or explain mechanism of the UK corporate governance framework. This mechanism requires listed UK companies to confirm their compliance with the code and explain any non-compliance. Regarding the executive remuneration, Global Go Incorporation should establish a remuneration committee comprised of the independent non-executive directors. This committee should report fully to the shareholders each year on the company's executive remuneration policy, including full disclosure of individual directors' remuneration element. Furthermore, this company should adopt performance measures that link rewards to the both companies and individual directors' performance, thereby aligning to the interests of the directors and shareholders more closely. If the Global Go incorporates deviates from any of these recommendations, it must clearly explain the reason for each departure in its annual report, demonstrating openness to the shareholder even when not in full compliance with the specific recommendation. Right. So now you can understand how you need to develop the answer. Right. How you need to develop the answer if there is a such kind of a question is asked. Right. So don't worry, I will upload these answers to the LMS. Right. But for the question number section B and section C, so you have to answer on your own, right? And you have to upload it to the LMS. So then I will upload the answers. And for the MCQs, I will upload the answers for the MCQs in next week before Wednesday, right? So then you can review your MCQ answers as well, right? And next week, we are having the quiz on Sunday, 9 to 10, right? Right. Any questions other than that?
No, sir, clear.
Any questions?
No, sir, clear.
All right. Right. So let's wind up the session for today. If you don't have any questions, so I can see 34 people are joining with the session now, right? To scan your QR code, right? So I will share the QR, so then you can scan your QR, right? All right. So after scanning the QR, so you can leave the session. So thank you very much for participating. So next week we are having the physical session, right? And also next week we are having the online quiz as well on Sunday, right? All right. So thank you very much for participating. So have a good day. Thank you.
Thank you, sir.
Thank
Good
you.
day.
Thank you, sir.
Thank you, sir.
Give me a second. I need to adjust that. What do you call the? I What's your batch? 16 MOH, right?
Yes, sir. 16 MOH. Weekend.
Okay. And the exception batch is there, right? 17B.
Yes, sir.
Or can you see my screen? Can you see, right?
Yes,
Guys,
sir.
okay.
Yes.
Is it working? The QR code is working.
It's working, sir.
It's not working.
Working.
Okay.
Okay. Okay. Okay, you can scan the QR code and mark your attendance and you can leave. So thank you. Have a good day. I will make it available for 4 minutes.
Thank you, sir.
Guys, have you scanned the QR code? Shall we leave? There are 12 members. Okay, I hope everyone scan the QR code. So thank you very much. Have a good day.